So I've been getting questions recently about where the markets are. We see in the news fairly consistently how markets are hitting fresh or new all-time highs, and it's causing a little bit of angst with investors because for those that are having, GICs or what have you maturing, and they're trying to do something different with them. They're trying to actually invest and generate cash flow because again, interest rates as they trend down, you're not getting the same yield as what you would have before. So one of the big things that they're asking is now a good time to invest. And so I came across this slide or this data that I thought was pretty powerful. And what it did is it actually went back over roughly the last 50 years, and it looked at if investors invested at all-time highs, which is roughly where we are today, versus any other dates, what would the outcome be? And surprisingly, what it actually taught me is that whether you invest near where we are today or you invest in any other time, the returns are virtually the same. And it makes sense if you have a mid to long-term time horizon, and then these kind of blips that we have in the markets in the short term, if you're holding for mid to long term, you're always going to make money on the upside. We go back to 2008 and 9, had you invested in 2008, yes, you would have went through one of the roughest and toughest periods of our investing lifetime with the great financial crisis, but you would have come out on the other end, and starting in early 2009 or roughly March of 2009, we went through the longest bull market that we've experienced in decades. Same thing as if you go back to, the COVID pandemic. Had you invested, early in 2020, January and February, and we had that really sharp and compressed decline in March of 2020, had you had a mid to long-term time horizon, you would have fared just fine, okay? It's the same as 2022. Look back at 2022 when we had high interest and high inflation. Had you invested at the end of 2021 and you went through that contraction throughout the full year in 2022, well, if you go back to where we are today, you'd be positive and would have had a pretty positive experience in general. So when it goes back to investing, don't look at trying to time the market. It's time in the market, which is the key thing. And if you have a mid to long-term time horizon, you're well diversified, you're accessing 5 to 6 asset classes versus the traditional 1 to 2, you're going to be fine. So if you have questions about how this might be applicable to you or whether it's a good time for you to invest as you shift maybe some GICs to maybe some other asset classes, then we should chat. We can chat for 10, 15, 20 minutes. I can give you a little bit of an assessment, educate you on some of the things that you should be doing and point you in the right direction. I look forward to chatting. Have a great day.